Hello everybody, hope you're doing very well and welcome to this evening's Contenders live stream. Where we've got a lot of action going on once again in Bitcoin during the stream, but never mind. Today is actually going to be a really important lesson for you all. I'm going to be going through it's like a real practical trading lesson. This is one that obviously you're going to watch it now live in the stream, but I really recommend that you go back and watch this 2, 3, 4, 5 times. It is going to be a really practical lesson. Basically, I'm going to be going through compounding, so what compounding is, how you compound trades, okay, averaging down in a trade, which is quite advanced, but nevertheless I'm going to cover it today, averaging down, and then laddering into trades. So this is a lesson on something that you will not find in a textbook. Okay, I've never seen this in a textbook. It's like never covered in textbooks anywhere. So this is something that I've just like picked up theories and put together. Not claiming that it's my own. I'm sure other people do it as well. But it is a really practical lesson, and one that you are likely to have to go back and review because it's super important. And this is a key part of my trading strategy. These 3 topics today are really key. It is really important, today's lesson, and that's why I recommend that you do go back and watch it again. So then it clears up maybe things you might miss in the live session today. So I'm going to be going over those 3 concepts. Okay, starting with Ren chart of the week. Ren. Today is just going to be a perfect live stream. Literally, this Ren trade was so good. So good. So I'm going to start with Ren chart of the week. Okay, then I'll move on to the lesson of compounding, averaging, and laddering. Okay, then I will move on to a quick recap of the trading journal, because I had so many questions about it, so I would like to just cover that for 5 minutes at the end, and the importance of it, because I don't think you all understand the importance of it. So I will just recap that quickly, and then move on to Bitcoin. I mean, what is happening at the moment? It's been pretty decent, to be honest. The technicals have been respected, so we have to say this is a really nice chart to be trading. Then I will end with some information about next week's stream, which is going to be on a different day. It will be on Monday instead of a Wednesday, but I'll cover that at the end, okay? This is going to be a very important stream. Yes, everybody, I have had a haircut and a shave. I look about 10 today. This is what happens when I have a shave and haircut. But back to my younger years. I've been using some Kills facial cream as well, so maybe this is helping. Shout out to Kills. Hope you all enjoyed tonight's live stream. I'm sure you will have a lot of questions, but please save all the questions to the end. That way I can get through the material and I might answer your question as we go along. Save questions to the end and I will cover them all in one go, okay? That would be best for everybody. So let's begin first with Ren, and I'm really looking forward to this part of the lesson, by the way. I think it's going to help you all so much. But let's start with Ren. So this was such an insane move. I don't know how much of you have been following Ren. Obviously I've been talking about it a bit in the group, but if you're not aware what Ren is, it's kind of a beast. Off of its original 618 bounce, this coin is moving like hundreds of percent. It's pretty insane coin to be trading, and obviously a highly volatile coin, but thankfully to the upside the majority of the time. So that's very nice. And all we know is that this was posted on the 23rd, so literally yesterday morning. Okay. And we had just hit all-time highs. Okay, this 1239 was the top, and that is the all-time high of the move. Okay, so we were getting a retracement on a coin that is extremely hyped and extremely bullish, in my opinion. Very bullish, okay? So it's like one of those coins that, I'd already been trading this prior, so this wasn't my first trade, by the way. But I wanted to get back into it, and this was my opportunity. What do you see here on the screen? Think for a second, what can you see? Why would I be taking this trade? Before I explain, what can you see on this chart that strikes out to you? Why am I placing my entry at 976? Can you see? I'll give you 5 seconds. 4, 3, 2, 1. Well, okay, let me explain. So you have confluence here. Okay, you might not notice it straight away. You need to train your eye a little bit. Okay, what you notice here is a 1 hour order block. Okay, 1 hour order block and the 382 Fibonacci coming together for confluence on a coin that is really bullish. Okay, you have to imagine, on a coin that is so bullish, are you expecting it to come down to 618, 786? I mean, no, you are not really expecting it to come down that far. A bullish retracement is obviously between the 236 and the 382, so that's your bullish retracement. Obviously it had lost the 236, so 382 is your bullish retracement at that point. Okay, so the entry 976, it was actually 4 laddered entries into this, so this is going to go quite well into today's lesson with going on about averaging. But yeah, the entry target 1197, which was obviously exceeded. This target exceeded, and I'll go over how I traded this after my target was hit. Stop loss, okay, wide stop loss here, and it was underneath this horizontal level, underneath this downward sloping old resistance slash support now trend line, and the 0.5 Fibonacci. What I really wasn't hoping it to come down this far, obviously, but I didn't expect it to come down that far. Okay, the daily, the 0.5, it was just the horizontals. The support was so good. It's one of those opportunities that the support, when it's so good, doesn't normally get hit because everybody wants to buy it. Well, you front run it, everybody waiting to buy in just has to buy in higher up and the move can continue on a coin that you obviously cannot short. You can only long this coin. So yeah, this was just such a nice opportunity. So let me explain it in a bit more detail for you all. So yeah, as you can see, 3 ladder long entries, okay, 382, top of the order block, and 0.5 of the order block. So it'll be a tiny little bit of lesson. Today's focus is not order blocks, that is coming. But you can see a little bit of how I do order blocks today. You know, short-term trade, wanted to see a quick bounce. This bounce, I must say, is a lot quicker than I expected. I didn't expect it to bounce 20% so quickly. That's pretty insane if we're all honest. How quickly that went. I was expecting maybe 24 hours, and it happened in a matter of hours, 20%. Like 1 hour order block, okay, 382 retracement on a coin that is extremely high, near all-time highs. Okay, I have to be aggressive with the entry as a large retracement is not likely. Okay, I must stress here, is not likely. I'm not saying it's impossible to get a large retracement. I just say, well, in the terms of probabilities, it was not, in my opinion, likely to get that heavy retracement like so many people would have wanted. Okay, so take profit, obviously 1197 equaling 22%. Okay, also wide stop loss, 0.5 below the fib and horizontal support. That would invalidate this long setup. Okay, and it was a soft stop. Okay, so then the results of this trade. Well, let's go over to the chart a second. I'll show you how this is traded out. Very, very, very nicely, by the way. So yeah, really nice. What you can see on this trade. Okay, let's zoom in a little bit because let's go down onto the 5 minute and show you all how this traded out in a moment. Okay, so we zoom in here. You can see that we had this initial bounce area. Obviously, the 382 is 995. So remember, 995 is the 382. Okay, and as mentioned on the setup, it was 3 entries. Okay, 382, top of the order block, 0.5 of the order block. Okay, actually, I think I had. Can't remember whether I had 4 entries. Yes, I did. So this is incorrect. I put on 4 entries. This is the thing. So I put on 4 entries at the bottom of the order block, and the bottom of the order block never got filled. So it was actually 3 entries that I got filled on. So this is I've written it a little bit incorrect. So it was 3 laddered and long entries, and only 3 of the 4 got filled. So 75% fill, and then I cancelled the 4th and added a lot higher up. So I'll explain that in a second. It was actually 4 entries. Okay. Oh, no, it was, it was 3 because it never hit the 0.5. Yes. Apologies. So, yeah, it was this. It was the 382, the 1, the 0.5, and a 0. So I've wrote that incorrect, but that's what it was. And it never filled the 0.5 or the 0. Okay, so that's how it played out. And now I'll explain how I added it back in after it took this out. Okay. So obviously when you're laddering in, so this is going to link into today's lesson. When you're laddering into a position, not all your positions will always get filled, okay? When the lower positions don't get filled, you obviously have to see when it is unlikely to fill those lower positions, know when to cancel them, and know when to add in higher up, okay? So this is going to link in nicely. I love this Ren trade, by the way. So what you can see here, okay, what you can see here really nicely is price coming down in a downtrend, clearly downtrending. How can we tell it's a downtrend? Low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, where did that lower low come in? Right onto the top of our order block. Okay, right on the top of our order block, right there. Okay, let me go on to the 1 hour and just really quickly explain what this order block is. So what we're looking at here, okay, is our 1 hour red candle. Okay, so uptrending, red candle, continue an uptrend. Okay, so these are order blocks that you expect to hold on the way back down. Okay, there was sellers here. So when you expect to get a bit of support, it's not just any red candle. Okay, so you can't just say, for example, oh, this red candle here, this red candle here. You know, not every one you can really class as an order block. It's kind of like a skill that you'll get with time. And like, for instance, I would view this as another 1 hour order block because it's the 1 hour order block prior to a strong move to the upside. This is a 1 hour order block, 1 hour red candle prior to a strong move to the upside. Okay, so that's what you're looking for, and I will do a stream dedicated to order blocks in more details, but more or less you're just looking for that red candle prior to a strong move to the upside, and flip that around. If it was a bearish order block, it would be your last green candle prior to a strong move to the downside. Okay, I don't want to focus too much on order blocks now. But that was our 1 hour order block on the 382 Fibonacci level. Okay, so with that explained, let's go back down to the 3 minute. So this is how I was looking at this: low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, onto. Oh, here we go. Sorry, lower, low, lower, high, lower, low, lower, high, lower, low, onto that order block. Okay. So then we obviously got filled on the 382, filled on the 0.1, the 0.5 never got filled, and I can't actually remember whether I did have this level 1 now. I might be going crazy. I've traded so much today. I can't actually remember whether I just cancelled the 0.5 or I did have one here as well. I literally can't even remember. I think that I had... anyway, it's irrelevant now. I might have not even had this bottom one. I can't remember. I definitely cancelled the 0.5 because obviously never hit. But I can't really remember whether I had this point. Well, anyway, I'm not going to spend too long on that. It's kind of irrelevant now. Anyway, you can see that we got that strong move down onto literally the top of the order block. Look at this on the 1 hour chart. Looking at this on the 1 hour chart, you can see that there was wicks, okay, wick down straight onto the top of the order block, followed by, so what candle pattern would you call this? Well, you would call this obviously your hammer candle. Okay, so that's a long lower body, closing back up. So you could call this, it's not a swing failure pattern, but it's just like a hammer, isn't it? Long lower body closing back up the top of the range. So hammers are really nice to see after a downtrend. Long lower wick, no or little to upper wick. You know, hammers can be red or green, it doesn't matter. So that's a hammer candle right onto the top of our order block, holding 382 support. Really, really, really bullish. Okay, so when we come back down to the 3 minute here, okay, when we come back to this 3 minute, okay, what we can see is this is when I cancelled my order when I saw this. Okay, so obviously I missed a little bit of the move, but it was low, high, higher, low, holding, breaking back above this resistance. At this point, as soon as we took this resistance, because I'd seen, okay, this is what I was looking at. This was the resistance that if price was going to go down, I would have wanted it to obviously have held. And why did I cancel lower orders here? Because this is really important. When you are laddering into a trade, obviously, not all your ladders or not all your bids are going to hit. It's really normal that they don't all hit, okay, if you've recognized good support. Then okay, when it done this, so it was going down, 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 but then we go low, top of the order block, bounce, high, higher low, higher high, higher low, through the resistance. At this point, I cancelled my lower order and I just market bought with the lower order, you know, cancelled that lower order, the position that I wanted, just market bought, because for me, we had changed the trend on this lower term time frame, holding the key support that I was interested in trading. So at that point, as we changed that market structure, higher highs, higher lows, obviously 3 minute time frame, we hadn't taken out the high, but that is a substantial move away. You know, there's another 6% in there. So, you know, substantial high, but you would be aware of this. But nevertheless, we had changed the trend on the lower term time frame. We were above then. At that point, we were back above the 382. We were, most importantly, back above that hourly level, this old resistance. Okay, so that's why I cancelled the lower orders, added them back in, you know, a little bit higher on a market buy. But nevertheless, it's obviously worked out very well, and you can see the reaction that we had from this level. Okay, so there you go. There's obviously the reaction. Now, you might be asking, well, Daniel, you didn't close out at the very top of the move. Yes, so this is a good point. So let me go on to this slide. So yeah, results of the trade and how I will trade it now. Okay, so really quick question from Paul. Why did I trade this order block and not the one above? I guess you're looking at this order block. Well, you can see that this order block is totally untested. Okay, this order block firstly has, so much space in the way. It's kind of irrelevant at this point. Okay, and the nice thing about this one is that it's right below the 382. So that's like confluence. Okay, I wanted to obviously, buy the 382 down to the bottom of this order block, and what you have just below it is obviously this crazy high area of support. Okay, there's a crazy high area of support here. Okay, really big support. So this is obviously front running essentially that big area of support. So yeah, you just have to get time with it, and I'll explain order blocks in more detail in an actual lesson. But yeah, that's why you choose this order block and not this order block or this order block, for example. This one's really irrelevant in my opinion, but yeah, this is the best order block to choose. Okay, totally untested 0.5, and it was just like an amazing order block basically. So yeah, I hope that explains that. But yeah, so perfect bounce from the top of the order block, literally the very top of it, and it held the 382. Okay, so showing strength at the support. Wick, hammer, massive continuation after that hammer candle. Okay, so as you can see here, this was live in the moment. Okay, you can see 28 minutes left of this candle, and it hit my target to the pip, and it literally in the end, I think this rejected about down to this daily. So the daily was 1104, and it rejected down to the daily, and that must be about a 8% rejection there. So really big rejection, and it obviously pumped. I was so happy. I literally bought the exact bottom and sold the exact top and in this move, but taking another trade, as I now believe this is going to keep going up, and so I started then to ladder into a second trade. Obviously closed out of this one, but entered into a second one, and I got pretty lucky, to be honest. It literally retraced to this daily and done an SR flip. So let me map out this daily for you. So there is the daily that it flipped off of. Put a magnet tool on. I'll label that back on the daily. As you can see, I've changed this chart a little bit, but look at this. Look how perfect it was. Literally so perfect. Okay, so here you are. This is where I was closing out the trade. Okay, this is where I was closing out the trade. What happened following? Okay, you got a rejection at target. Rejection at target. You can see the lower wick forming. Came down, retested the daily. Retested that daily. You can see here a 5-minute order block as well, by the way. Retested the daily, retested this order block, okay, and got a significant bounce to the upside, okay. And this is where I just literally just trailed stop losses. Got into that positions, trailing stop loss, trading stop loss, trading stop loss. Obviously, this one got stopped out already now because trading stop loss, trading stop loss, trading stop loss, trading stop loss down. But what's quite funny about this one is it has now done another SR flip off of the hourly level at this point. So there's your hourly level, yeah. Hourly support. It did get another about 8% bounce. I think this was now. Let me just confirm this. Yeah, about 8% bounce. So yeah, this is like this hourly level now is your support, isn't it? So yeah, I hope that you have all enjoyed that chart of the week. To be honest, it's been a pretty amazing trade, and I hope that you've taken something. If you didn't trade this the same as me, then I hope you've taken something educationally from that explanation, because yeah, that was literally such a good trade. Such a good trade. This is the sort of trade that you can be so proud of, and literally I'm so proud of it because that for me is just, yeah, so good trading. So yeah, that is chart of the week on Ren. Okay, if you are interested in Ren right now and you're not in a trade, well, I would be looking obviously your support, which has now been tested twice, by the way. So this is weakened for a third test. You want to be really aware that it's weak now. But 1913 daily is still the 1104. Obviously you have to view this something like this, yeah. So you have the potential of this. Not the cleanest, but a descending triangle type formation going on there. But then your highs, if you want to wait till you take the highs, 1322. Okay, so with the way this coin is going over the last, let me just show you where it originally bounced from, because I found this just fascinating. You take your fibs from low up to high at this point in time. Well, where did you bounce? No surprise where it bounced overall. Low to high, came down to the 618. At this point, there was not the hype that it had. So you have to think that at this point, at the start, about 1 month ago, more or less, it was a coin that most people never traded. And then obviously it retraced to the 618, got the second pump. And I think this is now where pretty much everybody knows about it. So you have to be, slightly more careful at this point. you know, the first pump, I didn't trade this first pump, by the way. I'd never traded it here either, but I did get interested on this when it came to the weekly. Okay, so you look here on the weekly on the 618. Wow, that's amazing support, isn't it? Right there, literally weekly 618, and you actually have a second weekly here where it bounced on in the end again. So let's add in that really quickly. So you can just see that it held the second one, bounced off of your top one. Okay, bounced off of that top one on the 618. So that's like the amazing part about it, that literally offered that opportunity. And then what I would note about it as well is, because this was really nice, we had this going on the trade, where it formed like obviously not a perfect symmetrical triangle, but nevertheless upward sloping trend, downward sloping resistance, and it broke through it, and obviously there then just continued up and up and up. So yeah, I've loved trading this coin, and I hope that's helped educationally on giving that explanation today of the trade, the original trade setup, and you know, the way that I went around trading that. So yeah, thanks. I hope you've enjoyed that part, and yeah, any questions, any extra questions about it, save it till the end and I will cover that again if needs be. But yeah, that was such a nice trade. So as mentioned here, I'll just quickly read out. Yeah, the coin, that original pump was much quicker than I expected to target. And as I wrote on the pick, like, yeah, entered another long where I will trail the stop loss in profit to manage this new trade position. And obviously I got stopped out as it got that second dump down. But obviously then it just SR flipped off of the hourly again. So it's pretty nice coin. And as I go through Bitcoin at the end, you'll see how these SR flips are, you know, not just happening here on REN, but they're happening on Bitcoin, the king coin, right? So yeah, they're just so nice to trade. Okay, so that now brings me on to the main focus of today, which is going to be going through compounding trades. Okay, compounding, averaging down, okay, and laddering. Okay, so they are three different concepts. They are slightly interlinked. Okay, so they have theories more or less the same, but they are obviously totally different. Okay, so you may have heard people saying about this, but you know, you might have no idea what I mean by it. Okay, laddering is something I do every single trade. Obviously, the champions, when I do my live trading, have a slight idea about this, but I'm going to explain it in a more detail today. So, compounding trades. Okay, compounding trades is such a good strategy. All I will say as a sort of disclaimer, these three strategies are slightly advanced. They're not just, you know, most people buy stop loss target. They have the three things in mind, and that is perfectly okay for a, you know, any trader. That's perfectly okay for, if we're honest. This is a slight step above, and it is adding a lot more complexity to your trade setups. Really, it is adding a lot more complexity. It's not just a simple buy, target, stop loss trade anymore. And this is how I trade. Every single trade, I trade with these three steps. Okay, so very rarely, okay, will I ever just enter one entry, one stop loss, and one target. I would say 99% of the time I do not do this, and I use these three methods on pretty much every single trade that I do. Okay, so this for me, although it's slightly advanced, is such a key lesson today that I just felt it was a good time to go through it. Okay, because it's going to give you a lot of practical, what's the word, knowledge. Okay, I guess I'm passing on my knowledge here of how I trade, and this is for me one of the reasons why I'm so successful in trading, because I use these three methods so well. So hopefully today I can explain it. You can start to use this concept if you feel comfortable. I would just say do not rush into it, because you can mess up if you start to rush into this, you know, with it being another level of complexity, which can add in another level of even more profits. It obviously adds in a whole nother level of increased risk. Okay, so there is obviously that always in the markets, what is more risky is obviously more profitable. Okay, so with more risk there's more profit, but you know, really the focus I want to say is there's more risk with this. So please do not randomly start using it without practicing. Okay, really you need to practice this, because it's not an easy thing to just start watch this video and suddenly make money with it. Okay, you need to practice, really, please. So with that said, what is compounding a trade? Okay, so compounding is essentially, I'm going to go through some real examples on this chart in a second, but just for the sake of this quick sheet that I've done, it was essentially you're in a trade. Okay, so let's just imagine this is our trade setup on Ren here. We've bought the symmetrical triangle here, we're targeting this random target for a 50% gain, and we've got our stop loss in place. Okay, that is what 99% of traders are going to do. They're just going to enter their entry, stop loss, and target. Okay, very well. There is absolutely nothing wrong with that at all. Okay, that is a standard trade setup. Okay, now what is compounding the trade? Okay, compounding the trade is when you take your original setup, you still do the first part of the trade, you still take your entry, stop loss, and target. That's absolutely the same. It's the managing of the trade as you go along in it. Okay. So the compounding a trade is when, as you are going through your setup and price is reaching target, okay, so you can see here, price reaching target, when you get a secondary setup, and this should be a trade that you would take regardless if you were in the position or not, okay? So for example here, as you know, that daily level that I managed to flip was obviously 1104 on Ren. Okay, so obviously if you were not in a position at all, that is a trade in itself that you could take, isn't it? Okay, that flip of 1104 is a trade that if you had missed all of this move, as you move up, move down onto that daily level, that is a trade that one would possibly take on its own. Okay, so what is the strategy of compounding? Compounding is essentially, let's say you had here a 1 Bitcoin position, okay, and then you get a second entry, a second setup, where instead of, doing something random or just waiting, you add in another 1 Bitcoin to the setup, okay? So then you're adding in, you would now have a 2 Bitcoin position, okay? But this secondary setup is in itself another trade, okay, but it's compounding your gains. So as price is moving up to target, as you would expect, as you get support resistance flips on the way up, okay, you are adding into trades. Let me draw this out, okay, let me draw it out. Don't worry, today's gonna probably be a little bit of a longer video, but there's so much key stuff in here. So let's say price moves up like this. Okay, let's say price starts moving up like this. Okay, we see price retracing down and we know that we're in an uptrend. And we say to ourselves, right, we want to buy here, stop loss below the low, for example, and aim up for X, Y, and Z target. Okay, irrelevant, but this is what we're going to do. So this would be our trade setup, okay? And then we've entered the trade. As price starts coming up as we expected, we get another SR flip here, okay? As you get that second SR flip in the trade, it doesn't have to be support resistance flips. It could be any type of theory that you want to do. I'm just using this for the example. Another way that's triggered an entry, okay? We can take another entry in here, okay? Another entry in here. Let's say target's all the way up here. And we could enter this as a second trade entry. So why would you compound? You would compound this trade because there is another setup in here which has presented itself to you on its way up towards target. So it makes sense to take a compounding option, so you're adding onto your already open position to maximize profits, okay? As they say, you want to let your winners run, okay? And when you let your winners run, why not add to a winning position if there is another setup, okay? So what you would do in this scenario is this original stop loss, as you compound your second trade, that stop loss that you had here, you move that stop loss up to where you place this stop loss, okay? So then if you do, in fact, get it incorrect and you get stopped out, well, you still take profits here and you lose a little bit of money of what you added in here, okay? So that's the extra risk. If you had not have added in this trade and it did get stopped out, well, you still would get stopped in profits. But if you add in and compound and you get stopped out, you're adding extra risk. So everything that in this position is obviously a loser. But that's not what you want to happen. So, let's say you compound here and price, as it expects, continues up. And then you get another opportunity. Okay, let's say then we get our second or third now opportunity of a long position here. Long position, stop loss below the lows, up to target. Okay, and then this would be our third compounded trade within the overall setup because it's presenting another setup. And you would only ever take your compounding trade if it was a setup in itself. Okay, so you wouldn't just randomly add on because it's doing well. It has to present a setup that if you were not in this setup at all, if this was your first trade, would you take that trade? That's what you have to say. If you would take it and it presents a good stop loss and a good target still, well, you will add into that trade although you're already in it, okay? So that's how you view it. And again, you would have this stop loss moved up to where you would place this stop loss. So you're guaranteeing profits. guaranteeing your profits or also maximizing success, okay? And maybe you get the typical scenario where it doesn't quite hit target and you end up coming down, okay? And obviously at this point you would have hopefully have found another level of moving up to stop loss again, like so, and then you obviously get stopped out as it comes down, okay? So that's compounding a trade. I hope that makes sense for everyone. I'm going to repeat. I'll go through it all. I want to go through the three theories, okay? And then I'm going to review them all again at the end, okay? Just so it fully makes sense to everyone. These are not too difficult in explanation, but trust me, when you go to do this live, yeah, it's not the easiest thing to do, and that's why I'll go through some like examples. Okay, so I will explain this in more detail at the end, so don't worry about this. Okay, so does everybody understand that concept of compounding, what compounding is? Okay, so compounding a trade is when you are already in one trade and then add to another when a good setup presents itself, okay? With a good risk to reward and a trade you would take if you were not already in it, okay? Remember, moving up to stop loss is very important. It has to be a trade in itself. That is compounding a trade. You know, yeah, it's just a super successful, profitable way to be managing trades if you are comfortable managing a trade while you're in it, okay? So now, that's compounding, okay? The next is averaging down in a trade, okay? So let me use Ren as an example here. I think I went into, yeah, let's just use Ren as because we've been going through it, let's use it as the example here, okay, in a nice live example. So let's say here on Ren, well, let's just randomly say that we decided to buy at this order block. Although I wouldn't have, let's just say that we wanted to buy this order block for the sake of an example, okay? Although this is not really an order block, let's just say we wanted to buy here, you know. Let's just say we do, for the sake of the example. Okay, so we buy here, and we target the highs still, and we place our stop loss where we can see a relevant area of resistance, or let's just say we thought our resistance was on this order block, okay? So we gave ourselves a 3.2 risk to reward ratio, all nice, okay? But then this happens, okay? Your entry is taken out, and you find yourself in the red, okay? This is really, really, really advanced, and I really say if you are a newer trader, you should not be averaging down, okay? This is quite important. It is a really advanced concept, okay? To actually implement execution in your trades is really advanced. It's definitely not recommended for beginners, okay? Because you are essentially adding to a losing position. That's what it is, okay? But I do this quite a lot, so you know, it works really well if you know what you're doing. You just have to know what you're doing, and hopefully you will know how to do it by the end of the day. So essentially, let's say we took our first entry off the top of this order block, okay, and we've bought in here at 1052 sats, okay. We are still have the same, you know, same mindset that this is a really bullish coin and we're expecting a good retracement, but let's say we didn't expect at all for the 382 to be hit because it's so bullish, for example. So we buy here on the top here, first entry taken, and within 10 minutes we see ourselves in the red, okay? But because we see there is a critical, amazing level of support on the 382, I personally would average down into this trade. So although I took my original position and I didn't expect it, let's say, to lose this support, I really believe this support would hold, okay? But because I'm presented with a second setup, okay, I'm presented with a second setup on the 382, I buy again, which is obviously averaging down my price, okay? So the original position filled at 1034. By entering a second time on 995, I have now averaged my price to 1011, okay? So I've taken an average price now, okay? So this is a way that you can get a better average price as a coin moves down. Really, really, really important that you do not use this as a newer trader, because otherwise you could see something like this and just keep adding to a losing trade, and that is definitely not what you want to be doing, just randomly adding to a losing trade. I would say as a beginner, you are much better off just cutting out the trade and just taking a stop loss. Okay, it's really, really advanced, but as I'm going through the other concepts, you know, I use it, so let's just use it, I know, understand it. So basically, you see a second setup presented in itself on the 382. So let's say you buy again on the 382 to average down your price because you're still expecting this to bounce, okay? And then you obviously get your bounce in the end. And the way that I would normally do this, if I average down into a trade, as soon as I got the bounce to get out of break even, I would stop out of the trade at break even. I wouldn't continue on this to profits. Okay. If I get into a situation where I've lost the first trade and I get into a second trade to average down my buy, I generally will just take a stop at break even, or take profit at break even, just to get out of the trade, review why we lost that support, and think, okay, I must have made a incorrect first setup. Okay, I just want to get out of this trade at a break-even price, and I will review the price action. If I then review the setup, and actually on that secondary bounce there, it has bounced really nicely off of the support and it's looking strong, well, I will then re-enter, but I generally like to get out of it break-even. Have a fresh new look at the charts and see if there will, what did I miss? Why did I miss that original setup? Okay. So that's how I look at it. And I would really, really stress, yes, sometimes I just will take the loss. Absolutely. I will just take the loss and not average down. I only will average down if there is a secondary level of strong support that makes it worth averaging down onto that level. Okay. Does that make sense to everybody? I definitely would not recommend this to beginners, because otherwise you might just find yourself in a losing trade and just keep buying as it goes down, and that's definitely not what you want to do. Okay, so all I would say for a tip, okay, is make sure if you do decide to average into a trade or average down, because it's a position that you never imagined to go do to this level, if you do average into a trade, average into it once or twice at the maximum, and then third time have a stop loss. So let's say that we originally bought here, average down on the 382, average down on the top of the order block. Well, we have to be very, very, very strict that we're not going to average down again. And if it hits this level, for example, we are 100% cutting out the position. We cannot just keep averaging down, averaging down, averaging down, averaging down, averaging down, saying, oh, it's going to bounce at some point. No, you definitely cannot do that. You have to be very, very strict. Yes, I will average down 1, 2, 3 times max. But it's very rare that this happens. But if that happens, then I would definitely say to myself, well, I've made a massive mistake here. I need to cut this trade out. Okay, so you should never, ever find yourself keep just adding and adding and adding and adding, saying, oh, it's going to bounce at some point. That's not a good strategy. It's only a good strategy if there are key support levels. And to add on another level of complexity to this, let's say my first order was 1 Bitcoin. Well, my average down buy, if there was a strong support, would be 2 Bitcoin. So that way, if I get the bounce to the break even, it doesn't quite require that break even bounce sort of as it would if it was just another 1 Bitcoin. I can require a smaller bounce to get out of break even, because my lower average down buy is bigger than my original buy. Okay, so let's say this was a 1 Bitcoin buy, so then my average price lower down is a 2 Bitcoin buy. It's giving me a 3 Bitcoin position. The bounce has to be smaller for me to get out at a break even price. Okay, that again is adding even another level of complexity to averaging down. But that's what I do. So yeah, hope that will make sense to you all. Again, I will cover this at the end again, but that's essentially the second thing that I love to do. And just so you're aware, this is something that I'm doing, these strategies, compounding, averaging down, laddering, I'm doing on every single trade. This one not so much, because I don't this is only in a bad situation if you get if you lose your original setup. So you shouldn't be doing this too much. Okay, this should be something that you're not doing very often, but it's a good strategy to have should something go wrong. Okay, but you shouldn't be using this every day, for example. But compounding I use daily. Laddering I use on pretty much 99% of my trades. So this laddering is so important concept to understand. Okay, and I want to go through laddering today on Litecoin. I want to go through laddering on Bitcoin. What examples? Yes, those are the examples. Oh, and I had this one on Ren randomly here. So yeah, I'm sure you've all heard me say about, oh, I'm laddering into this trade, or I'm laddering out profits into this trade, okay? Because it is something I say quite a lot, because I do it every trade, okay? So laddering into a trade is when you do not want to place all of your orders in one place, or you do not want to just do one order, bam, and say that's my buy, okay? It is almost impossible to buy the exact bottom or short the exact top. Thus, laddering into a position is something I do a lot, okay? Because as a realist, I know that it's almost impossible to time or buy the exact bottom and time the exact top and sell the exact top consistently. You're not going to do it. Let's be serious. Hence why laddering into a trade is so important for me. Yeah, so what is laddering? Let me just explain this for the people that are a bit confused by this. Basically, let's say here on Ren, we got Ren. Let's say we saw this 5-wave move up and we're expecting like an ABC, retracement, for example. So we know that an ABC on a wave 2 can come really anywhere between the 0.5 and a 786 on an altcoin, okay? Those are our standard retracements, 0.5 to 786 on a wave 2 for hyped altcoins, okay? I made a video before, 618 to 786. Those are your altcoin buy-ins. So yeah, with that in mind, let's say we do not want to. We know we cannot time the exact bottom on these coins. It's almost impossible. If you consistently just place a buy at the 786, well, a lot of the time you'll miss the move. And if you place your buy on the 0.5, well, a lot of the time it will come to the 786. So we know we want an average buy. Okay, so this is not averaging into a trade because this is our pre-setup, pre-idea. We believe that it will come in between this region. So this is totally different from averaging down, by the way. This is laddering in because we have an inkling that it will come down between these levels. Okay, so for example, you would place one buy at the 0.5, one buy at the 618, one buy at the 65, and one buy at the 786. So you've made 1, 2, 3, 4 orders. Okay, you all understand that. 4 orders. Let's say that you had 4 Bitcoin that you wanted for this position. Well, it would obviously be 1 Bitcoin, 1 Bitcoin, 1 Bitcoin, 1 Bitcoin, or you could do 2 Bitcoin, 1 Bitcoin, 0.5 Bitcoin, 0.5 Bitcoin, for an example, yeah? So you can weight it to the top, or obviously you can do 0.5 Bitcoin, 0.5 Bitcoin, okay, 2, 1, or something like this, You don't have to just go 1, 1, 1, 1. You can, average it, weight it to the top, weight it to the bottom, depending on where you really believe that it's more likely to go to, okay? So that's how why you ladder into a long position, because you do not, you understand that, it's impossible to consistently get bottoms and tops, and you want a good averaged price into the setup, okay? The same goes for shorting, which I'll cover in a second, okay? So I want to go through some real examples now of laddered trades that I've taken recently, why I took the laddered trade, how I took the laddered trade, the significance behind laddering into the trade, okay? So I want to start with Litecoin. So Litecoin, let's load it up a second. Where is it? Litecoin. Okay, so this firstly is beautiful chart. Beautiful chart. This was obviously chart. So this was the one that I gave one chart of the week for the champions. This was obviously my setup call. But what you can see here is we didn't come down to the 618, okay? So you never come down to the 618, okay? And this is an option where you can ladder into the trade, okay? First laddered entry for me was hoping for a swing failure pattern, okay? So just below the lows of this wick, entry number 1. Entry number 2, 0.5 of the Fibonacci level, okay? Entry number 3, 618, obviously you can see never hit. Entry number 4, just below the 6.5. I like to place it just below. So then you have 4 entries here. As you can see, when looking at it like this, we're expecting, as it was like this, we're expecting a wave downwards, okay? The probabilities at this point were that it was going to head down, and I was expecting it to head down to, my favorite scenario was it done a swing failure, took the stops, come back up. Okay, that was my number 1 favorite scenario, as I said to everybody. That was my scenario. Did it happen? Kind of, okay? But we never got these lower fills, okay? So this lower fill never happened. As you can see, what happened was it did, in fact, do a swing failure, close back above, but then on the next day, it wasn't a straight off swing failure pattern. It just come up and below. Unfortunately, it was, well, I guess nice because it filled lower positions, but it obviously in the end came down to this 0.5 and then ranged here, okay? When we zoom onto the 15-minute, at this point, we would not be cancelling lower orders because we can see our daily level has resistance. So we were between 0.5 and 0.5. Yes, what we could have said is it's forming like higher lows, but you are on the daily level at this point. So you've got clear resistance and you've got a clear kind of like ascending triangle support. But at this point, you would not be cancelling lower orders because you've not been given a reason to cancel the lower orders yet. The higher lows is not a reason in itself to cancel lower orders. Okay, so let me just go back a step. Why was I laddering into Litecoin? Firstly, I wanted to buy Litecoin because I believed it was bullish. Okay. Secondly, why did I want a ladder instead of just placing one buy onto 618? Well, because if it is so bullish, well, it's not going to reach the 618, or unlikely that it reaches the 618. But nevertheless, there's no guarantees in trading. So I wanted to get a good laddered entry. I wanted in the position, and I was willing to ladder down to the 6.5 for the entry of the position. Okay, hence why the setup was like this. Okay, laddered down to this region. Okay, what is the signs when you ladder into a trade to cancel your lower orders? Okay, so coming back to here, obviously you all know what's happened today, but going back to here, and you see obviously this coming up. Okay, and the main problem, well, when you're cancelling lower orders is when it does this. This is your real key resistance. Can you all see this? Real key resistance. Resistance, 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 resistance. Okay, really, really massive, isn't it? When do you cancel lower orders? When you do this SR flip right here. Resistance, 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 broken. This is when you should be thinking, right, probably not going to fill lower orders, and it does that. Comes and back tests, takes the high. You see here how it perfectly done it. Took the high, held a higher low, and you are definitely cancelling lower orders now because you've changed the market structure. High, higher low, higher high, higher low, higher high, higher low. You know, this is a real sign that it's not going to come to the 618. So at that point, you cancel lower orders and just market buy. Okay, I like to do this, just buy in. Okay, I've realize that it's not coming down to lower levels. It's time to buy the coin because it has clearly broken resistance. It's clearly flipped that resistance into support, and it's just made a higher high, higher low. Okay, very, very good sign that it's not going to fill lower orders. Okay, so obviously this is really normal when you ladder into a position. It's actually normal and good if it doesn't fill all your orders, because it obviously means you've got the bias right of the trade and it hasn't come down all the way. Hence, you were correct in your setup idea. So it's really normal, and it's just knowing when is a good time to cancel the lower orders. So like when you were doing this, you could have had the inkling that it might have not filled when you start forming higher low, higher low, higher low. Consolidation under resistance is obviously bullish. So there was the idea that you could break up here. But I didn't cancel those orders until it actually done that break up back test, and then I was like, right, it's not going to do this anymore. So obviously it's like, you got 50% of your orders filled at a good price. Swing failure pattern order, 0.5 order. You never get 618 order filled or 6.5, so you cancel those orders and buy in here. And obviously in the end you come up to this hourly level here. So come up to the hourly. You're getting rejected of this level. Okay, and now what you can see, so now this is where you could be compounding. Okay, let's compound and imagine this is like a compounding strategy now. Okay, so let's say, well, I'm already in it, so I'm in the position, so already in a long from obviously our lower orders. Okay, would this be an order in itself? Absolutely, that would be an order in itself. So let's say you had the original buy in here. Okay, stop loss was all the way down here. Okay, so let's just walk through this. This is going to be so good. Okay, and let's say we were targeting the top up here for a 10% gain, and just say stop loss below the 6.5, something like this. Okay, so we were in this original trade. We got one fill, two fill, no fills at the bottom. Okay, but what happens here? We start to form an ascending triangle. We break up. Here we break up. Does this offer a new trade setup in itself? Absolutely it does. Compounding the trade. Okay, break resistance, backflip, backtest resistance. Is that a trade setup in itself? Yes, it is. Stops below the low. Again, targeting the highs. You have now made two trade entries. This could have been when you cancelled your lower orders and added in, for example. Okay, but nevertheless, that is now two longs in the setup. We get another opportunity to ladder into the trade here on the 5 minute. When we high, higher low, higher high, higher low. Is that another SR flip? Yes, it absolutely is. Is that another setup in itself? Yes, it is. Compound. Enter the new trade here. Stop loss below these set of lows. Okay, or aggressively put your stop loss below this low right here. Safely below this low. Would have probably chose this low, So, and you have to remember, these stop losses from here all the way down there, that stop loss here, all of them are now sat at this stop loss here. Okay, so they're all sat here. Okay, so now you're in 1, 2, 3 positions. Okay, is this nice? Yes, it's absolutely nice. You're in 3 long positions on Litecoin, and now do you have another opportunity for an SR flip compounding trade? You're already in 3 trades. You would move your stop loss up to here. Very nice. Is this a compounding trade? Well, yes, you can kind of see a compounding trade going on here. Bull flag. So what you could say is, well, here is my new compounded trade up for the target. Okay, so then that would be your 4th entry within this coin. So it's 4 trades. Each one was its own setup, as if you were never in a position, but nevertheless, you are adding into your existing position. Okay, so for example, if this did come down and stop us out here, well, this last trade would be a loser. Okay, but you would have been stopped out of your 3 winning trades. So overall, you're going to be up a lot of money. So that is compounding. Okay, on a nice live example here on Litecoin. So I hope that makes it seem nicely explained. Okay, the next one I want to go over is Bitcoin. Okay, oh yeah, here we go. So Bitcoin moving up nicely here, by the way. So yeah, Bitcoin. Let me go over why this was such a perfect trade. Again, I'm a very proud guy. I love to do this. So please don't take some of this as bragging, but this was such a perfect trade again. And again, this is one that I gave to everyone. Oh yeah, somebody like messaged me on this one. They put in a, let's just say a 6-figure buy off of this trade setup that I gave, and they made, well, obviously a lot of money from it. So yeah, this was nice. But why was I buying on this order block, or why did I ladder on this order block? As you all know, I made 2 buys off of this, or 3 buys on the order block. Okay, the 0.1 of the order block, entry number 1, the 0.75 and the 0.5. Okay, why was my heaviest buy on the 0.5? Because on an order block, the 0.5 is the critical support. You do not really want to see it come to the 0.25 or the 0. That is a red flag in an order block. Okay, so why did I ladder into this trade? Okay, laddered into this trade because I would have liked, obviously you can see here, you got an original bounce on the top of the order block. You then got a bounce on the 7.5 on lower term time frames, and then you obviously got your bounce on the 0.5. Why was this a laddered trade entry? Well, because there's no guarantee that you do not come to the bottom and stop you out. If you get stopped out, would you want your average entry to be at the top, or would you want your average entry to be at the bottom or in the middle? Well, obviously if you're getting stopped out, you want it to be at the bottom. But nevertheless, you average into the trade buy. Well, I placed 4. Buy. Okay, obviously it never come down to fill the lower 2 orders, but you had the long lower wick to show you, well, this is clearly holding. If you see that long lower wick onto the order block, you would say, yeah, that's done its job. It's acted as support time to, you know, come down to the lower term time frames, let's say, and see how that's reacting on a lower term time frame. Let's go back to it, and you can see here that's obviously you come down 0.75, so bounce off a 1, bounce off a 7.5, bounce off a 5. Okay, why would you cancel the lower 2 orders? Well, you do this, and you retest and you go away. So at that point you'd be like, well, there's no point in holding for 0.25 or 0.0 because the likelihood of it holding is very, very, very unlikely. Okay, so that's why I laddered into this trade, and how successful was that? Very, very nice. So that was laddering into Litecoin, laddering into Bitcoin. Okay, does anybody have any questions at all on why I ladder, how I compound trades, why I compound trades, why you average down, or how I average down into trades? Anything from today? Do any of you have any questions at all? And I will answer. I understand that I definitely recommend you watch this video a few times. Maybe I've gone through it too quickly. I hope not. But you might need time to digest everything that I've gone through to figure out if you have questions. To give you a quick review, compounding trades. Well, I've gone through that Litecoin example. You can see how it works. It's a setup in itself. Averaging down into trade is definitely not something that you should find yourself doing often, because it does mean you've got your setup wrong, but it is like a backup line for if there is a secondary setup within that losing trade that gives you an option of buying to get out at a break-even price to then review your setup. And laddering into a trade. Why do I ladder into the trade? Well, because I know that it's almost impossible to get the exact bottom. I want a good average price in this trade, and when my lower bids are not bought, okay, I will buy up higher. okay, but I buy up higher with the under the premise that the support that I imagined is held, and I have a lot lower risk by cancelling those orders and buying higher because the market has proven to me it's holding support. Okay, so it's a very nice way of having a safe buy. Okay, again, let me just explain this. On this, for example, this order block buy, it's not like you don't have stop losses. Your stop losses are just here, for example, under your invalidation level. Okay. How do you ladder out? Yes, so really, really good question. I didn't cover that. So just as you ladder into a position, you will look to ladder out of a position as well. So let's use what have I traded today? EOS. Let's go through EOS. So EOS. Let's say that you done this setup with me where we were looking at the bottom. Let's just do a random example, okay? Let's just say that we had this as our target, okay? So when do you ladder out with a position? Okay, laddering out I do in like take profit stages. Okay, so take profit 1 hourly level, take profit 2 hourly level, take profit 3 daily level, essentially laddering out of the trade. Okay, what do I do when I ladder out? If I ladder out and say take profit here, I will look to get back into the trade, compounding it. Okay, so although I take profits, I will want to get back into it. Okay, so we come down to the 15-minute. Obviously this never gave a compounding trade, but I was so ready for it because I took profit on this hourly and then I had a second compounded trade of this. Okay, so as you can see here, it never gave me my second compounded entry because I took profits on the hourly and I wanted to just get on the top of that, but it never came down. So I never got to do the secondary fill. Okay, so that would have been an amazing compounding option, but unfortunately it never filled. Okay, happens. Obviously you don't close out all your position because it's not hit the target, but nevertheless, that's what you're looking to compound a trade. Okay, another example of compounding where you could do, for example, this and say you want to buy or compound a 382 buy, for example. This is just, why would we say originally, why would we not buy this? Okay, why would we not compound this? Let's imagine that we can't see everything that's happened. And let's say, why would we not compound this 382 stop loss below the 0.5? Okay, why would that not be a good compounding trade? See if you can answer. Why is this not a good compounding trade up to the next target? It's got an 8-to-1 risk to reward ratio. Is this a compounding opportunity? No, it's not, because the stop loss has to be all the way down here. Remember, there's no stop loss here. There's no stop loss, so it has to be all the way down there. You get a 1-to-1, 1-to-1 risk to reward. In that example, there is no compounding opportunity. It has to be presented like this, where there's a clear setup, as if you were not in the trade. Okay, that obviously gives a really clear setup, doesn't it? As if you were in zero position. So that's where you can compound. Questions. How do you ladder out? Okay, so I just covered that. Laddering out of positions is the smartest thing I've learned since joining. Yes, it's honestly like a total game changer, I would say. Yeah, it can make you go from like an average trader into a really good trader, honestly. All I want to say is it is not for everybody. Okay, it really is not for everybody. You might try and manage your trades like I do and really fail. Okay, and that's not a bad thing. It's just realizing that this is not for you. And say, for example, I do it very well, but that does not necessarily mean you're going to do it very well. Everybody has their own personality traits in trading. Let's say your original target was this up to the daily. You might be better buying here, selling here, not touching it. Okay, you might find if you try and do like I do, you are just losing money. Okay, you might find that you're doing it very badly. If that's the case, don't do it. Just do not manage your trades. Enter, exit, stop loss. It's perfectly fine to do this. Okay, I manage my trades because I'm experienced, good at it. Okay, but I just want to stress it's not for everybody, and that's going to lead us on to the trade journal in a second. I don't think I've ever seen fibs on an order block. What time frame would you normally use for that? Okay, so you would use, obviously you have different order blocks, different time frames. So you have like, most people are going to look at weekly, on the weekly, for example, and then you obviously, you have order blocks essentially on every time frame, onto the 5-minute. So, you have them on every time frame. So there's not like a right or a wrong answer for this. It's just the higher the time frame, the more relevant it's going to be. Okay, so as with everything in trading, if it's on a 5-minute chart, yes, it can work, but it's just less likely to play out on a 5 minute chart than if it was as if it was a daily order block, for example. Okay, so what we could say is, well, here's our kind of a daily order block. Well, this is our resistance here. Okay, so that would be a really big resistance. Whereas if this was on a 5 minute chart, it's just it can trade this. It can work out. It's just not got the same probabilities on high time frames. Okay, hope that makes sense. Yeah. So, next question. How do you determine your ladder out percentages for take profits 1, 2? For me, it would all depend on the trade setup. Sometimes I will go, let's say, let's just stick with EOS now. I've been looking at it. So let's say we did have this daily target. Okay, stop loss below the low of this parallel. Okay, how can we just say whether we want to, okay, this would have 4 take profits. Top of the parallel, well, actually 5. Middle of the parallel, if you're in here. Top of the parallel. This, in fact, would be a separate setup in itself. But let's just say, randomly, we wanted to buy here and target here. The original setup would be this, by the way. That would be the original setup. Take profit 1, take profit 2. But once it's broken, flipped, and moved up, well, yeah, it's a different trade. But let's just say we're running with this. You have, 5 take profits. Are you going to do 20%, 20%, 20%, 20%, 20% on each of the targets? I mean, there's no strict rule. Again, this is not something you learn in a textbook. It's something that you want to practice, and I would say it's very it's not mechanical. There's not a mechanical 25, 25, 25, 25. It's very much look at the trade setup and say what's best for that trade setup. I would say if you're looking at this trade setup, originally from this, I would say you'd be looking at take profit targets, something along these sort of lines, 40%, 40%, okay, and then something, higher percentage take profits, because I would say if you were looking at this originally, obviously now it would have been, different, but in the original time when you're looking at this and you're buying the bottom of the parallel here, you're not going to have like high percentage take profits up here, because it's very unlikely that you get up there. Okay, so I'd be looking at this like 40% take profit, 40% take profit, and then if I was to targeting up here, I'd be like, okay, this is going to be a very low percentage take profits, okay, because I want them to take the majority of my profit here. Okay, so it's not a mechanical 25% or 20%, etc. But guess what? You got to do compounding on this setup. Okay, so here is EOS. Okay, what do you see? Okay, at take profit 1, well, it just goes straight through. Take profit 2, do you get the opportunity of a compounding trade? Yes, let's say that you took take profit here. So you took take profit here of 40%. Okay, so you've already taken 40, you're 80% out of the position. Do you get a compounding setup? I mean, yes, you absolutely do. Okay, stop loss below the thrust candle here. Okay, retracement. Okay, and then for example, you could be going on to your higher targets, for example. So you do, you've taken 80% profits, but then you can add back into this trade by compounding it. Okay, so it's not like I take profits and I'm out of the trade. I always try and get back in if it's actually continuing up to what I expected it to do. I still have trouble finding the actual setup coins that have not moved yet. If I ladder in, it seems too late. I mean, I have had a few questions about, similar type of questions. And what I say to people, if you find yourself missing too many moves, I would say it's very likely. Let me ask you this. If you find yourself missing a lot of coins, how many coins do you have on your watch list? Okay, think about that and I will give you my perspective. How many coins do you have on your watch list? Okay, if you have more than 5 coins on your watch list, well, I'm not surprised you're missing a lot of moves, because you're probably just chasing everything that keeps moving. That's not what you should be doing. Okay, if you find yourself missing moves, make a 3 or a 5 coin watch list and just concentrate on 3 to 5 coins. Okay, for example, you do not need to be going across. Let's say you had ADA, Atom, BNB, BAT, Engine coin on your watch list. These coins is all you're going to concentrate on. You should never miss these moves on your watch list because you're studying them every single day. If you have 100 coins on your watch list, well, obviously you're going to miss moves because you can't manage 100 coins. Or if you have your watch list and then one day you see, oh, BTT has pumped 20%. Oh, I'm just going to randomly start trading this. Oh, X, Y, and Z coin has pumped 20%, or I'm going to start randomly trading this and getting on a retracement. You know, if you see a coin on Binance that's up 100% and you start thinking, oh, I want to buy the 382 retracement here, oh, that's never going to end well. Okay, you want to have your watch list where you are trading it every single day or as much as you can and just keeping an eye on those coins. If you start having a 100 coin watch list, if you just start trading random coins that are up 20% on Binance, you are not going to do well. Okay, all I can recommend is that you narrow down your watch list and you watch these coins every single day. You should not be missing a setup, really, if that's the case. And if you are still missing coins when you've got 3 coins on your watch list, well, I'd just say you need more experience, more practicing time. Yeah, obviously newer traders are going to miss setups. It's normal because maybe they just don't know what they're looking for, and that comes with time and experience. How can you enter setups if you don't even know what you're looking for? Yeah, so you know, that will come with time and experience. Bear flag. Is hourly level as important as weekly level Monday open? No. So the most important is weeklies and dailies. Okay. So these hourly levels are just sub take profit targets, but you can see how relevant they are on. You have to look at this weekly, or look at this. It's just red candle, red candle, red candle. What do I always say when you see a sell off like that? The pump is very, very nice, because what does this do? It creates no resistance on the way up. So there's no weekly resistance here that stands out massively. Okay. We come down to the daily then. Well, the dailies are suddenly going to be really big resistances because there's no weekly. Look at this. This is a massive gap that if you take this high, you can run to this high very, very, very quickly. Hence why I really like EOS at the moment. But yeah, just like on the daily, there's no daily resistance. This coin can run because there's no daily resistance. So you have to come down to the hourly to find resistance levels. Okay, so you have to then take with a lot of significance these hours. This resistance. Okay, then obviously you're looking up at psychological daily. Okay. But what I loved about this coin is because it sold off so quick, well, it can pump really quick, and pump quick it has. Okay, take profit 1, take profit 2. So yeah, there you go. Thank you, Dale. Yeah, no worries at all, man. No worries at all. Has everybody understood what I've covered tonight? Everybody understood? Am I out of Ren totally? No, I'm still in it. But I've just got my stop loss below this low now. If I get stopped out of this trade, I'll be done with it. But I've been trading altcoins really, really aggressively today. I've traded so many altcoins. As you would know if you're in the champion group today, yeah, we've done very, very well. Yeah, those altcoins have moved. Litecoin, obviously, number 1. Litecoin, EOS, Atom, Icon, Engine Coin, Ontology's moved. Yeah, like literally every coin that I bought today is up like 5-10%. So it's just been a crazy good day for trading altcoins. Yeah, really, really, really enjoyable. But yeah, so I am still in Ren. Or yes, let's go ban. Cool. So that's enough of me. I don't want to go on about this. Cool. So if everybody's understood this, why do I want to now cover the trading journal? Just because I probably received about 10 emails about this. So the trading journal, which I obviously gave you all last week, you've now had a week to go through it. So if you have any questions, I hope that you can let me know, or feedback, or what you want added, you know, feature requests. Trading journal, what is it for? To preserve capital. Okay, I would recommend pause and read through this if you need to. Okay, but basically you want to not take trades out of boredom, or not be too scared to take a trade after losing too many in a row. If you lose some trades in a row, do not worry. If you have an edge and you have a setup, okay, you have a strategy, we need to stick with it even if you're losing. Okay, and this is going to help you. Okay, don't take trades out of boredom, continue to improve. Oh no, okay, you are only going to improve if you actually track why you're losing. Okay, you cannot. People come to me. I had a private lesson with someone, okay, and this is meant to be they're meant to be learning quick, and they came to me and they come to me with a loss that they took on a trade, and I said, well, I've given you the trading journal, are you even using the trading journal? And they said no. Okay, and it's like, I cannot help you if you cannot help yourself. I've given you this trading journal, which I truly believe is going to help you. And if you cannot even be bothered to put in the time for this journal, I actually cannot teach you, because you're not helping yourself. And he took that on board and he started using it, by the way. But yeah, it was just like, I'm giving you everything that I can. If you're not using this, I cannot help you, because this is a key step of learning. Okay, you cannot let me say, by sitting in front of your computer all day looking at the screen is not going to make you a better trader. Okay, it's not going to make you a better trader. Just looking at the screen all day, you're not going to improve. You have to enter your trades, and if you take losses, which is so normal, it's so normal to take losses, but you need to be recording why you lose the trade so you can go back and review why you lost and improve. So yeah, keep track of every trade you take. This will help you know what is positively and negatively affecting your trades. Going back to the managing, like I do, of my trades like this, if you find yourself trying to manage trades and in your trading journal you've managed lots of trades but you've taken lots of losses because you're managing trades, well, clearly you would have in your trading journal in big notes, do not try and manage trades. It does not work. Okay, or you will find yourself managing trades and it's done really well, and you'd have, yes, this works really well, let me implement it into my strategy. This is a really, really good guide for everybody. Okay, so yeah, do this, and then this is one where you can pause the screen to read this. This is a little bit of motivation I gave in my the champions group yesterday, so you can pause and read through this at a later date when you watch this back if you want. But this was really nice, and it's just basically saying, like, if you're FOMOing into trades, if you're panic selling, I would say you're not using this journal, because this journal is actually designed to make you think before you enter a trade. If you're entering in your entry stop loss targets, you're obviously just not randomly FOMOing into a trade because you've presented some sort of accountability. You're holding yourself accountable to the trade, be it win or be it loss in the trade at the end. Losses are normal, everybody takes them. Just try and learn from that loss. Okay, so I think this is really, really, really important, and I don't think you'd find a professional trader that doesn't have a journal, to be honest. So if you truly want to become a professional trader, which I really want to help you, I really, really, really want to help you make money. Okay, like, honestly, I want to help you make money and succeed and become a professional trader. Okay, but if you are not helping yourself, there's only so much I can do. And I really believe this is going to help you so much. Like, yeah, along with everything else that I'll do. But this, taking 5 minutes out of your day at the end of the day is going to help significantly your trades. Really, it's going to help you. So yeah, I really recommend that you do use this. Now I've made it for you all. So yeah, does anybody have any questions? Twitter's still shilling it. I would just turn off Twitter. Twitter's not going to help you. Twitter does not care about you. Turn off Twitter. You might have two good traders. 99% of Twitter has no idea what they're doing. Just be really careful. So yeah, let me end with Bitcoin. Okay, so let's just firstly see what we got going on here. Obviously, in a downtrend on the short term, we have just done this, haven't we? Lost the level, back tested. Lost the level, back tested, moved down, back tested, moved down, back tested, moved down, back tested, moved down, back tested, moved down. What is this? SR flip, support, resistance, support, resistance, support, resistance, support, resistance. Okay, so all we've done is gone support, resistance all the way down here. Okay, that's the first thing I want to know. Okay, really, really not looking good, is it? We come then out to the daily, and we say high, low, lower high, lower low, potential lower high. Okay, everything is stacking up for bearishly at this point. Okay, lower levels to be aware of are obviously these levels that I've got marked out on the chart. Okay, but there's hope. There's hope, because I think you reach a degree where something happens 1, 2, 3, 4 times in a row. Is it going to happen again? I think most people are probably aware of this now, and they will look to short this next SR flip and might get wrecked. As you all know, I've been playing it contrarian. I've been taking longs. You have to remember, I'm day trading though, so if I can do a day trade from that to that, that to that, that to that, that to that, well, I'm more than happy taking longs in a downtrend, because I love trading contrarian, and I think when there's extreme panic in the market, that is the time for the most money to be made. So yeah, I've been taking longs on this market, although this is not kind of like a strategy everyone should do. I still view this as a potential wave 2. Okay, so we still have to view this as a potential 1, 2, 3, 4, 5. Where's the invalidation? Well, a move below here is the invalidation, because obviously, as we all know, wave 2 cannot move below the bottom of, well, I haven't done any waves yet, but wave 2 cannot move below wave 1, and that's an invalidation. So you would say the risk is really low here. trading this as a wave 5 structure. Impulse. So basically, I don't want to spend too much time on this, but yeah, overall, we have to acknowledge that the structure is definitely bearish. But you might think I'm crazy, but I'm taking longs. But all I do is I'm day trading these longs, just for the SR flips. Okay, next level I'll be looking at for an aggressive like outside of intraday longs is if we now reclaim this. Okay, so if price actually done that, or then for the first time we'd have taken out that, would have closed above the resistance, back tested old support, hold it as support, and then you'd be looking at the monthly resistance, which is still really big, by the way. You have to just look at that and say, well, that's a really big level. But 10.3 is an upper side target if you believe we can get there. Okay, and if it doesn't happen, the invalidation is simply the low. Really, it is simply the low. If that low gets taken out, I would personally be looking, you might think it's crazy, but 7.4. I think 8,500 is a level every single person wants to long. Does that normally work out? No, it doesn't, does it? So, just like everybody wanted a short 6K where you're going straight through it, everybody wants to long 8.5. We can just go straight through it. Or it never reaches. So that's my preferred scenario. It just never reaches. And, that everybody wanting to buy here, I think that will either never reach and we move up, or it goes straight through. Obviously, you have to be looking at it, and that is support. But I do think that everybody wanting to buy here, you have to know like 90% want to buy here. So I either think they'll get wrecked and we'll bounce that, or down, or they never get their buy-in and we get to move up. So that's how I'm looking at Bitcoin. But I do like daily updates on this. I don't want to spend too long in our videos today. But yeah, short term, obviously you now have to be aware of this resistance right here. Old sort of level, this whole region, 9.6, 9.7. But overall, still leaning bullish on this setup, and while we hold support, because I have a clear area of invalidation. So yeah, this is still, for me, nice long opportunity. But you have to know this is not for everybody. It's quite risky. Do I need 2 journals, one for Bitcoin, one for USD? Yes. The only difference you'd have to make is obviously that, let's say this is a 10 grand account, for example. If you're trading with Bitcoin on your Bitcoin side of things, so on your USD you could enter like 1,000, okay, and you'd have this as your USD tracker. And then if you had a Bitcoin account, well, let's just say you have 0.5 Bitcoin, and then you would just trade with 0.5 Bitcoin in here and grow it over time. Okay, so you do have to have one for USD, one for Bitcoin. So you do have to have 2 different sheets. It's not going to work if you start doing 0.5 and then randomly start saying you have $1,000, because it's, I don't know. Yeah, you just have to have one tracker for USD, one for BTC. Okay. You do not need to touch anything where it has a formula. I'm going to get someone to lock this down, by the way. If you see a formula in the cell, just do not try and edit it, okay, because it shouldn't be touched. The only things that you need to do are the ones where there's no, I'm not even sure what I'm doing right now. Yeah, where there's like no formula. So you can see, obviously here you're saying whether you're going long or short, enter, exit, target. If you need, I can make just a static video for this. I think it's quite self-explanatory. Obviously, you don't need to be touching anything that has a formula. Do not try and edit this box, this box, this box, this box, because it's got formula in. It's going to automatically work it out. You see, you don't need to be touching these boxes because it's got formula. Okay. Thoughts on ×2 bottom, double bottom playing out? I have no idea which double bottom you're on about. Are you on about this one at 9,000? I think it's unlikely. If we lose the 786, I do, or this monthly here really. Like if you lose this, I don't think we'll get a double bottom. You might get a bounce for a double bottom like this. But overall, we lose this, and I am expecting lower levels. But again, you all have to know, I can change my bias like this. I'm not a trader that's married to any bias. I will literally just trade it as I'm given. Don't care about saying I'm wrong. But yeah, I'm going long. If I'm wrong, I do not care. I literally do not care if I'm wrong on this setup. But I'm long. And I will trade it till my invalidation. I've made great money on this move, and I will continue to make great money on this move. But if I take a loss on this long, I take a loss on the long. Okay, and I will reevaluate at my stop loss level. Easy. Twitter has too many. Yeah, Twitter's rubbish, man. Don't listen to it. Is there a way that your guy can add the extra tab for BTC USDT? Yeah, I can ask him. He's really good. I'm sure he can do it. Easy way would just highlight cells you edit with info. Yeah, I'm gonna get him to like lock things down. I have had a bit of feedback, so I will mention that to him tomorrow. By the way, I just want to say that obviously there's like quite a lot of comments that come here, and if I accidentally miss a comment, please do not take it personally. But there obviously are a lot of comments that come in, so I'm sure I've missed a few, but don't take it personally. Daniel, what is the best way to overcome emotions in trading as a beginner trader? Best way to overcome emotions? Use my trading journal that I've given you. That's going to be really, really key way, because you've already entered entry, stop loss, take profit. If you've entered that, you've unemotionally decided your setup, and you should not find yourself FOMOing, panic selling, etc., because you're abiding by what you've said. I really think the journal can help you greatly to remove emotions. Or likewise, you have to think. Let me explain something. I'm sure a lot of people went long off of the 618 yesterday. Okay, think about this. This is for me like number one, how I have an edge. A lot of people would have longed the 618. I longed the 618 as well. Okay, so I longed it as well. But guess what? We longed the 618. You start moving. Let me walk you through this, because I know, I just think this is true. So obviously people longed the 618, including me. Okay, you long the 618. You move your stop loss up, stop loss up, stop loss up. For example, you get taken out. Bam. Okay, let's just say this. So what do you think most people that bought the 618 yesterday, we wake up like this. We bought the 618, overnight you've been stopped out. Be it in profits, be it stopped out, we've been stopped out. Okay, do you think the average trader after being stopped out is going to wake up in the morning and be like, this is, I believe, let me go back a step. I believe the average trader waking up in the morning today was really upset, thinking, oh my God, this is going to 8,000. Oh, we've lost the 618, that the setup's over. I don't know what to do, and start panicking. They're either going to panic sell the rest of their bags, thinking, oh my God, what's going on? Or they're just going to be so depressed, maybe, that they got stopped out. They're just going to get very emotional, I believe, about it, because they're going to see that they've been stopped out overnight on the 618 and be distraught maybe about it. Okay, now this is the way I view it. Yes, I also got stopped out because I longed a 618, but I come into trading every day with a fresh mindset. Okay, I viewed this today. Okay, I saw that I got stopped out overnight because obviously we dropped at like early hours of the morning. I was asleep. I woke up, saw that I lost the position. Did that emotionally affect me at all? No, it did not. Okay, I viewed this again as a very, very, very good long opportunity, because what I realized was that we had now flushed out the 618. We had flushed out the 618. There was extreme panic. Okay, let me tell you, this is why you have to ignore Twitter. You wake up, you go onto Twitter, the first post you see is going to be somebody giving you an XYZ correction down to 4,000, okay? That's going to be the first thing you wake up and see. The second thing you wake up and see is, here we go, 8,500. The third thing you see is somebody boasting, saying, why were you not short? Anybody that longed the 618 is an idiot, and it's just going to make you feel very bad. That's probably what you're going to see on Twitter. What do I wake up and see? I view the sentiment extremely bearish. I see BitMEX funding going positive, equaling there's a lot of fear in the market. I see the fear and greed index on extreme fear. I think, wow, I am longing today Bitcoin. I am entering heavily into alts, and everyone in my champions group can confirm this. This is true. I went heavily into a long. I went heavily into alts. What happened today? Obviously, you have to think this was a really good move, by the way. A very, very strong move to the upside. Alts up 10% plus. That's unemotional trading. I saw that we were holding the pocket, okay, up to the 1 hour. I saw that we were holding our old level of support of the parallel, okay. When waking up and seeing this, we bounced off of the old parallel support. I knew that we had the 786 below us. Average trader, extreme panic. Me, contrarian, view this as an amazing setup. Twitter is not going to help you at all. And obviously that ended for a really, really, really great day of trading, to be honest. So yeah, all I would say is, I don't know where I was going with that. But what was the question? I've totally forgotten. Best way to overcome emotions: use the trading setup. Do not get emotional. View every setup at itself. Come into trading every single day with a fresh mindset. Do not get carried away. you know, you just have to have a really fresh idea of trades. Just because you lose a trade, do not be scared to take the next trade. If you've found an edge that works, stick with it. Don't think, oh my god, I lost this trade, I'm abandoning this setup forever. Okay, you know, just, I don't know, it comes with time. But definitely do not look at Twitter, because you're just gonna find, you know, I hate it. I hate it. You know, you get the sort of people that are just like, oh my god, I can't believe you done the opposite of what I done. You know, they only post this if they win their trades, obviously. But if, you know, let's say here you wake up in the morning and you're a little bit annoyed you got stopped out overnight, and then you see someone saying, oh my god, what were you thinking about longing these levels? Obviously we're going to 8,000 now. You know, you see that, you're not going to be thinking with a good mindset, wow, this is a very good long opportunity, are you? You're going to be thinking, oh my god, what was I doing? I was completely wrong. I'm waiting for 8,000. And then, you know, 10 minutes later you see price up $200 and you're like, oh my god, what, you know. I digress. It doesn't help. Okay, that is going to help you emotionally, blocking out the noise, concentrating your own setups, okay, and just playing the chart for how it is, okay. So we now have to just view this very simply as resistance, but we are coming back into it. This is pretty nice. This is support, clear resistance up here, okay. Very simply trade the chart for how it is. Don't be scared to change your opinions on the market. You could be bullish here, lose the level and flip bearish. There's no badness, there's nothing negative about admitting you're wrong in a trade. It's normal. Not everybody's going to win every trade they take. Yeah, be happy to accept a loss, okay. That's the main thing. If you get a loss, you know, this is something I said today. If I take a loss, I accept the loss and I move on. What is worse than taking a loss? Well, it's holding on to a losing position, because if I take a loss, I forget about it by the next day. But if I was to take a loss and just hold on to it and just hope for the best that it's going to turn around, that's going to mentally destroy me, because you know, something that I lose 2% on, if I just hold it, well, I'm going to lose 100% possibly, you know. So it's just like cut your losses small, okay. You know, there's no shame in taking a loss, because you have a controlled risk. Before you enter every trade, you know how much you could potentially lose, you know, especially with the journal that I've given you all. You know, it's going to tell you how much position size to use, and you know that you're only ever going to lose 2%. So you know before you enter how much you're going to lose. If you know, if you lose that trade, it shouldn't negatively affect you in any way, shape or form. So yeah, hope that has cleared that up a little bit as well. So yeah, that's it for them for tonight's stream. I hope that you've all enjoyed tonight. A little bit of a notice for you all is that I am traveling for the next 2 weeks. So next week's stream will be on Monday the 29th, and a little bit of a nice, you know, thing, I guess, for the contenders. Obviously champions, all I do is live trading now anyway, so I got like a 20 grand to 200 grand trading challenge, which I'm doing, because I will be traveling for the next 2 weeks. So the next 2 sessions for contenders, I'm going to do that live trading as well, just for 2 weeks, okay, and then we'll be back to theory. So yeah, Monday the 29th is going to be a live trading session with me, which is a little bonus for you really, just because I will not have all my documents, so I can't do the spreadsheets. So yeah, but just so you're aware, Monday the 29th will be the next stream, okay? Same time as normal, just a different day. This will go on for the next 2 sessions, and then everything will be back to normal, and I will continue with these sessions as normal, okay, with theory. It's just the next 2 weeks I will be doing these streams of live trading. I will post an announcement, or I'll get my guy to just post an announcement in the chat just to remind you all of the date change, okay? And that is it. I do again recommend you go back and watch this video like 2, 3, 4, 5, 6, 7 times, as much as you need until you fully understand everything. And if you then still do not understand something after watching it 10 times, well, that's a bit excessive. If you do not understand it after watching it at least 3 times, then shoot me an email and I'll help you out, or DM on Discord, you know. I'm here for you. So yeah, I hope that you have fully understood it. Thank you everybody for joining me this evening. I will be back to trade some altcoins and yeah, hope you've all enjoyed tonight's session. Thank you so much, and I will catch you next week. Cheers everyone. Muchas gracias. Cheers everyone. Bye.